There are 8 good reasons to own gold. Gold has been universally respected around the world across many centuries for its value and rich history. Its value has been recognized by many cultures for thousands of years. Coins containing gold appeared at least as early as 650 BC. The first pure gold coins were introduced during the reign of King Croesus of Lydia about 100 years later. Throughout the ages, people have continued to hold gold for various reasons. Societies and now countries have placed value on gold, thus perpetuating its worth. It is the metal we fall back on when other forms of currency or mediums of exchange do not work. This means that it always has some value as insurance against tough times. Whether the question is about national currencies or any other medium of exchange, the fundamental question is one of credibility and trust. If people are willing to accept dollars or gold or cryptocurrency in payment for debts that are owed, then that medium has credibility and trust. To the extent that people become unwilling to accept a medium of exchange in payment for a debt that is owed, that medium no longer has those attributes and loses value. Below are 8 practical reasons to think about holding some savings in gold. Reason number 1, a history of holding its value. Throughout history, gold has been seen as a special and valuable commodity. Today, owning gold can act as a hedge against inflation and deflation alike, as well as a good portfolio diversifier. As a global store of value, gold can also provide financial cover during geopolitical and macroeconomic uncertainty. Unlike paper currency, coins, or other assets, gold has maintained its value throughout the ages. People see gold as a way to pass on and preserve their wealth from one generation to the next. Since ancient times, people have valued the unique properties of the precious metal. Gold doesn't corrode and can be melted over a common flame, making it easy to work with and stamp as a coin. Moreover, gold has a unique and beautiful color, unlike other elements. The atoms in gold are heavier, and the electrons move faster, creating absorption of some light, a process that took Einstein's theory of relativity to figure out. Reason number 2, weakness of the US dollar. Although the US dollar is one of the world's most important reserve currencies, when the value of the dollar falls against other currencies, as it did from 1998 to 2008, this often prompts people to flock to the security of gold, which raises gold prices. The price of gold nearly tripled from 1998 to 2008, reaching the $1,000 an ounce milestone in early 2008, and nearly doubling from 2008 to 2012, rising above the $2,000 mark. The decline in the US dollar occurred for a number of reasons, including the country's large budget and trade deficits and a large increase in the money supply. Reason number 3, inflation hedge. Gold has historically been an excellent hedge against inflation. Its price tends to rise when the cost of living increases. Over the past 50 years, investors have seen gold prices soar and the stock market plunge during high inflation years. This is because when fiat currency loses its purchasing power to inflation, gold tends to be priced in those currency units, and thus tends to rise along with everything else. Moreover, gold is seen as a good store of value, so people may be encouraged to buy gold when they believe that their local currency is losing value. Although inflation soared in 2022, gold prices actually declined for most of the year. This was driven in part by the strength of the US dollar against other currencies. However, when inflation remained at persistently high levels, gold prices ticked higher in the final months of 2022 and early in 2023. Reason number 4, deflation protection. Deflation is the inverse of inflation. Deflation is defined as a general decline in prices across the economy. During periods of deflation, business activity usually slows, and often the economy is burdened by excessive debt. This has not been seen globally since the Great Depression of the 1930s, although a small degree of deflation occurred following the 2008 financial crisis in some parts of the world. During the Great Depression, the relative purchasing power of gold soared while other prices dropped sharply. This is because people chose to hoard cash, and the safest place to hold cash at the time was in gold and gold coins. Reason number 5, geopolitical uncertainty. Gold retains its value not only in times of financial uncertainty, but also in times of geopolitical uncertainty. It is often called the crisis commodity because people flee to its relative safety when world tensions rise. During such times, gold often outperforms other investments. Its price often rises the most when confidence in governments is low. Reason number 6, supply constraints. Much of the supply of gold in the market since the 1990s has come from sales of gold bullion from the vaults of global central banks. This selling by global central banks slowed greatly in 2008. At the same time, production of new gold from mines had been declining since 2000. According to the industry gold trading platform, Bullion Vault, annual gold mining output fell to 2,444 metric tons in 2007, from 2,573 metric tons in 2000. Since then, gold production has posted a decade of gains, peaking at 3,300 metric tons in 2018 and 2019 before dropping to 3,000 metric tons in 2021. The recent decline in production suggests the potential for renewed pressure on global gold supplies. It can take 5 to 10 years to bring a new mine into production. As a general rule, a reduction in the supply of gold increases gold prices. Reason number 7, increasing demand. Increased wealth of emerging market economies has boosted demand for gold. In many of these countries, gold is an integral part of the culture. In China, for example, gold bars are a traditional form of saving. The demand for gold has consistently remained firm. India is the second largest gold-consuming nation in the world. It has many uses there, including jewelry. As such, the Indian wedding season in October is traditionally the time of the year that fuels the highest global demand for gold. Demand for gold also has grown among Indian investors. Many are beginning to see commodities, particularly gold, as an investment class into which funds should be allocated. In fact, the SPDR Gold Trust, GLD, has become one of the largest and most frequently traded exchange-traded funds, ETFs, in the United States. Reason number 8, portfolio diversification. The key to diversification is finding investments that are not closely correlated with one another. Gold has historically had a negative correlation to stocks and other financial instruments. Recent history bears this out. The late 1970s were great for gold, but terrible for stocks. The 1980s and 1990s were excellent for stocks, but horrible for gold. In 2008, stocks dropped substantially as consumers migrated to gold. Properly diversified investors combine gold with stocks and bonds in a portfolio to reduce the overall volatility and risk. What determines the price of gold? Gold prices can be volatile and even decline from time to time, but the metal has proven to maintain its value over the long term. In general, movements in the price of gold depend on supply, demand, and investor perceptions. Because the metal is often used to hedge against inflation, the pace of inflation, and market expectations for future inflation levels can have a positive effect on gold prices. In addition, deteriorating economic conditions may bolster gold prices because the metal is seen as a relatively safe investment in difficult times. Thank you for watching. Remember, always do your research and consult with financial professionals before making investment decisions. If you found this video helpful, give it a thumbs up and don't forget to subscribe. If you leave a message below, I will respond. You also might like to check out my pages on Facebook and Rumble, the Global Macro Digest are, and see my books that are featured there.